Every morning at 6:30 a.m. Pacific, before I finish my first cup of coffee, a map redraws itself. Not a geological map, a signal flow map. Hundreds of nodes, dozens of connections. And every single line on that map represents a live trading signal. Buy, hold, watch, or sell, flowing through a system that didn't exist 2 months ago. Today I want to show you exactly what that map looks like. I'll share my screen so you can follow along. I'll walk you through 3 separate signal flows that feed into it. And then I'll introduce you to the 6 AI agents, each with a completely different personality, who decide what's actually worth acting on. You're listening to The Builder's Frequency. I'm Joshua Levy, test engineer by day, founder by night. This is where we talk about building things that matter, businesses, systems, and a life worth passing down. Episode 3, I showed you how I built the MRE system, the market regime engine. Episode 4, I showed you all the AI agents that run the entire operation. Today, I'm going deeper into the signal architecture, into how this thing actually thinks. Quick reminder though, I'm not a financial advisor. This is not financial advice. Everything that I'm sharing is experimental. I'm building this thing in public and testing it with my own money and documenting what I learn. Don't copy my trades. Do your own research. Consult a professional. Cool? All right, let's go. So here's the thing. When I first built the MRE back 2 months ago, it was essentially a scoring engine. Fear and greed index comes in, regime detection runs, and signals go out. It's a simple, linear, one input, one output. But that's not how the markets work. Markets are a web. Everything is connected. The VIX spikes and suddenly your crypto positions correlate with your bond positions in ways that they didn't yesterday. A geopolitical event in the Middle East moves oil, which moves energy stocks, which shifts the entire regime. So I asked myself, what instead of a simple pipeline, I built something more of a living map. Let me show you exactly what I mean. If you're watching the video, I'm going to pull up my trading dashboard right now. All right. As you can see here, the signal flow tab at the top, right away, you'll notice 3 sub-tabs across the top in the pipeline, right here. Pipeline, geopolitical, and portfolio. These are the 3 signal flows, 3 completely different lenses to look at the same market, and they each have a very specific job. But before I break these down, look at the summary bar right here in the pipeline tracking, 777 tickers. Out of those, we've got buy signals, hold signals, and various other information. You can see fear and greed is sitting at a certain number. That score changes daily and ripples through everything below it. And the current market regime, bullish, sideways, or bearish, that's the lens that colors every signal that the system produces. All right, signal flow 1, the pipeline. The first tab, pipeline, is the workhorse. This is where the system scans a massive universe of equities, ETFs, crypto, commodities, bonds, and produces buy signals. If you're watching the video, you can actually see how it works. The pipeline visualizes a series of nodes left to right, like a factory assembly line. Each column is a stage, and each stage narrows the funnel. Let me walk you across. It starts on the left with strategy votes. 8 independent strategies each evaluate every single ticker. Fear and greed scoring, regime confirmation, RSI oversold, mean reversion, momentum, and more. Each strategy is back-tested rigorously overnight, and each strategy casts a vote buy or not. Those votes flow into vote consensus. The vote consensus stage is how many of those 8 strategies agree. Here we can see some actually have 5 of 8 that agree. A signal with 3 or more agreeing strategies is a much stronger signal than just a signal with 1 or 2. What survives? Next, we have the persistence gate. This is a patience filter. It has a signal that has to persist. It can't just flash once and disappear. The system has to track how many consecutive days a signal is held. What survives persistence becomes a confirmed signal. And these are the real candidates. But we're not done. Confirmed signals hit signal gating. This is where the system checks for bear market suppression and sell side overrides. And a severe downturn in the gate tightens. It's the circuit breaker. Then confidence tuning. Every confirmed signal gets its confidence score adjusted based on the current regime, sector rotation, and how sideways the market is. A strong buy in a bullish regime might be a weak buy signal in a sideways one. After that, final filters. Now, forgive the poor labeling because this was developed and then I had to add stuff afterwards. But this is a cluster limit so you don't over-concentrate in one sector, asset level confidence threshold, crash mode checks, and multiplier caps. The system is actively trying not to give you bad trades. And what survives all that? The buy signals. Some signals are hold or watch, but when they get to the buy signals, all of those filter out, and it's just buy signals that get filtered into the alpha rank. The alpha rank scores every surviving signal cross-sectionally. How does this opportunity compare to every other opportunity right now? Top decile signals get flagged as primary trades. Then we have Fibonacci levels. The system calculates every entry point, stop losses, and take profit targets using Fibonacci retracement and Fibonacci extensions. So you don't know just what to buy, you know where to enter and where to exit. And finally, the agent analysis, which is the trading desk I'll get into in a minute. The 6 agents each review the surviving signals through their own lens and decide whether to act. Here's the thing. Every single one of those stages, back-tested. The thresholds, the persistence windows, the confidence weightings, all that has been optimized against historical data. This isn't guesswork. It's an engineered system with variables that have been turned over hundreds of back tests. Now, here's a question. What if the pipeline says buy, but something bigger is happening in the world that the technicals can't see? That is exactly what the geopolitical flow is for. Clicking over to the geopolitical tab, you're looking at a completely different kind of intelligence. This flow isn't looking at charts, it's looking at the world. And the first thing you'll notice is that it has its own signal pipeline, a row of nodes across the top, just like the main pipeline, but these nodes are tracking geopolitical inputs. You've got nodes like geopolitical signals, oil price shock, Strait of Hormuz activity, VIX fear gauge, defensive sector rotation, gold safe haven flow, diplomatic activity, and military posturing, all feeding into a consensus gauge, which then outputs into a regime classification, a sector rotation engine, and ultimately a portfolio actions node. Here you'll see an escalation score. Right now it's sitting at about 85 out of 100. That's the system's real-time read on how elevated geopolitical risks is globally. Then it gets even more granular. There's scenario probabilities. The section models 3 scenarios and assigns each a probability. Right now it's showing something like 35% chance of a contained strike, 45% for a prolonged campaign, and 20% for a broader regional fracture. Each scenario has different market implications. Below that is a key watch points table. Specific indicators the system monitors which escalation and de-escalation triggers. Things like Strait of Hormuz tanker traffic, VIX levels, oil prices, diplomatic responses. Each one has a current reading, a threshold that would escalate the alert, and a threshold that would de-escalate it. And then this is where it gets actionable. Sector recommendations. The geopolitical flow sorts every sector into 3 buckets: overweight, underweight, and monitor. Right now, energy, defense, and gold are all overweight with 80% confidence. Airlines, tech, and consumer discretionary are underweight. Financials are on the monitor list. Each sector card shows a specific ticker affected and why. Energy benefits from supply disruption. Defense benefits from sustained spending. Gold benefits from flight to safety flows. The geopolitical flow produces both buy and sell signals, and it operates at the sector level as well as the individual tickers. Those signals get layered on top of the pipeline output, giving the trading desk agents a richer, more complete picture. So the pipeline is the optimist scanning for the technical opportunity. The geopolitical flow is a strategist reading the room, but neither of them answers the most important question for anyone who already has money in the market, which is answered by the portfolio tab flow. Portfolio flow is the 3rd tab, and it's the mirror image of the pipeline. Instead of finding things to buy, its entire job is to look at everything we currently hold and produce exit recommendations. The risk manager, the skeptic, the one asking, what could go wrong with what we already own? And just like the pipeline, it has its own node-based workflow, left to right. Let me walk you through it. On the far left, you have portfolio input. That's every position we currently hold, as well as all the agents on our platform, what they hold. Right now, we've got 38 open positions. Those positions flow into an exit strategy evaluation. 8 independent checks that stacked vertically. Each one is looking for a different reason to exit. Stop loss proximity is basically asking us, is the price dangerously close to our stop? Strategy consensus is, have the strategy votes that supported our entry decayed since we bought? Momentum reversal. Has a 20-day momentum flipped negative? Sector sentiment. Is the sector running into an extreme greedy territory? Regime check. Has the market regime shifted since we entered the position? RSI overbought. Is the RSI above 70, signaling a potential reverse? Fibonacci target. Has the price reached our extensive targets? And hold time analysis. Have we been holding longer than the target hold period? Each strategy evaluates every position and flags it, or doesn't. Then those flags aggregate into the exit signal count column. A position with 1 exit signal is probably fine. A position with 5, that's a serious warning. The count nodes feed into exit gating, the risk management layer. It applies urgency multipliers. If you're sitting on a loss and you have multiple exit signals, the urgency ratchets up. If you're profitable near a Fibonacci target, it flags a profit-taking opportunity. And finally, exit recommendations, the output column. 4 categories: hold, if you've got 2 or fewer exit signals; watch for 3 or 4; trim for 5 to 6, reduce your position, and exit for 7 or more, get out. So if you have this natural tension built into the architecture, the pipeline is constantly finding reasons to buy. The portfolio is constantly finding reasons to sell. The geopolitical flow can swing either way based on what's happening in the world. And that tension, that's not a bug, that's the entire point. Because when all three flows align, when the pipeline says buy, the geopolitical flow confirms the macro setup, and the portfolio says your current positions are safe, that's a high conviction moment. Now for the trading desk. All three of those signal flows, the pipeline, the geopolitical, and the portfolio, they all converge on the same destination, the trading desk. I have 6 AI trading agents. Each one has a completely different investment philosophy, risk tolerance, and decision-making framework. And as of yesterday, each one is managing a $100,000 portfolio. Real paper trading accounts, real entries and exits automatically. All three signal flows, pipeline, geopolitical, and portfolio, feed directly into these agents, and they independently decide when to enter positions and when to exit. No manual intervention. Think of them as 6 portfolio managers sitting around a table and all looking at the same data, but seeing completely different things, and each making their own trades. All right, now let me introduce the team. We've got the technician. Charts are his Bible. He looks at patterns, regime changes, and mean reversion. If the technical setup doesn't support a trade, he won't touch it. He doesn't care what the fundamentals say, just show him the chart. Now we have the Oracle, the classic value investor. He's looking for intrinsic value. He wants to buy great assets at a fair price and hold them. He's the one who will ignore a buy signal on a speculative crypto position because it just doesn't meet his quality criteria. Patience is his superpower. The contrarian, hard money advocate, gold, commodities, inflation hedges. If the macro environment suggests currency debasement or inflationary pressure, this is your guy. He's also the most skeptical of tech-heavy positions. When everyone else is piling into growth, he's buying gold. The macro man. Global liquidity is his North Star. He thinks in terms of liquidity cycles, the dollar, crypto as a macro asset. When the liquidity tide is rising, he gets aggressive. When it's receding, he gets defensive. He sees the whole chessboard. The scout. Growth at a reasonable price. That's his mantra. He's looking for asymmetric opportunities, assets that are undervalued relative to their growth potential. He'll buy what the Oracle won't, but only if the risk-reward ratio works. The architect. Diversification is his religion. He's building a portfolio designed to survive at any regime. Inflation, deflation, rising growth, falling growth. While everyone else is chasing momentum, he's rebalancing. Boring? Maybe. Resilient? Absolutely. Here's how it works. All three signal flows produce their own output. Those signals get fed into all 6 of these agents simultaneously, and each agent independently decides, based on their unique philosophy, whether to act. The technician might see a buy signal on the QQQ and say, yes, this setup is perfect. The Oracle might see the same signal and say, no, it's overvalued. The contrarian ignores it entirely because he's allocated to gold. The macro man says yes because global liquidity is expanding. The system doesn't require consensus. Each agent manages their own portfolio. But when you see 4, 5, or all 6 agents agreeing on a signal, pay attention. That's a confluence signal. And in our testing, confluence signals have significantly higher hit rates. Let me leave you with 3 lessons from building this system because this episode's about architecture, but the architecture taught me something deeper. Tension is a filter, not a bug. Having a pipeline that finds buys and a portfolio that finds sells and they naturally disagree, that's not a design flaw. That's the whole point. The best decisions come from structured disagreement. If you're building any kind of system, any kind of AI system in particular, trading or otherwise, build in the adversarial check. Make your system argue with itself. Lesson 2. Personality creates differentiation. 6 generic agents looking at the same data would produce the same output. 6 agents with deeply encoded philosophies produce 6 different perspectives. That diversity of thought is where alpha lives. When you're building AI agents, don't just give them a task, give them a worldview. Lesson 3. Maps beat dashboards. I had a traditional dashboard for weeks. Numbers, tables, charts, it was fine, but the moment I switched to a signal flow visualization, a spatial representation of the system's thinking, I started seeing patterns I'd missed entirely, clusters forming before the numbers confirmed them. If you're building a complex system, find a way to make it visible, not just readable, but visible. That's the signal flow architecture. 3 flows, the pipeline finds the buys. The geopolitical flow reads the world. The portfolio flow manages what you own, all converging on the desk of 6 agents who each see the market through a different lens, redrawing itself every single day. If you found this interesting, please subscribe. Whether you're on YouTube, Spotify, or Apple Podcasts, hit that button. Every subscription helps this show reach more builders who are trying to create something real. And if you want to see the actual signal flow dashboard in action, the live pipeline, the agent portfolios, the daily signals, drop a comment or message me. I might open up a view-only version for listeners. I'm Joshua Levy. This has been The Builder's Frequency. Keep building, and I'll see you next week.